As we talk to our customers as they approach us to borrow to buy a house or a car or start a business, to build inventory, receivables in their company, we talk about the cost of debt, and we look at client relationships through an entire cycle. So when we look at our credit strategy, we don't change it through a cycle. We don't loosen it in good times and tighten it in bad times, because we want the customer to be able to handle their debt through a cycle. So a big part of our risk strategy is to think about clients' ability to pay through a cycle. So when we think about credit cycles, as we normally go through them, we don't have to worry about the timing of that cycle, because we think through a cycle from our adjudication perspective. Certainly we're seeing rates increase as monetary policy, tightening policy starts to kick in. The impact of that, from all the debt that consumers, businesses, and governments are carrying, the net neutral rate in the economy is lower. The amount of tightening, each 25 basis point increase in Bank of Canada rates does 50% more braking power on the economy because of that debt, the amount of cash flow that comes out in debt servicing. So rates will not cycle as high as they did in the last cycle, which are around 450, 475 basis points at the peak. The net neutral rate, if you listen to the Bank of Canada, is probably 300 basis points, sub 300. So you see a much narrower curve through a cycle. So that has implications obviously on the consumer. But overall, I think we're in a healthy tightening phase of the economy. We're seeing strong growth, we're seeing strong employment. I think it's having a positive effect on the housing market. We had to use a number of policy changes in the pre-monetary tightening phase, which were important. B20 being the most recent, it has had an impact on demand in housing. But overall, I think we're going through a healthy tightening phase in the overall economy. It's hard for some consumers to see their rates go up and their cash flow change, and they have to adjust for that. But I think we've lent knowing with confidence that we stress for that in our tests. The regulations now require all banks to stress for that, so we feel that Canadians are generally well prepared.
Now, we know that over the past decade, it has been the consumer largely carrying this economy on its back, and I know the Bank of Canada, others are waiting for other areas to take the baton. Think of some of the challenges that we have as an economy, and the Trans Mountain Pipeline, which we thought was going to go through, and now that's being sent back for review. How important are projects like Trans Mountain to really keep the economy humming?
I think they're very important. I think you've seen as the economy has shifted, and as you referenced in your previous question, the Canadian consumer did drive a disproportionate share of economic growth, and we're seeing a rebalancing to business investment, which has lagged the cycle, and to certainly exports, which have lagged the cycle. And I think you're seeing exports. I think 50% component now of the growth in GDP. So a healthy shift, driven by a strong globally synchronized growth, particularly out of the United States. So I think we're seeing better balance from consumer to business to exports in our economic growth. But economic growth for the next 5 years is dependent on investments in the future. And when we think about our energy industry and how important it is to continue to invest in developing our resources and getting those resources to global markets so we get a fair price for those, Trans Mountain is a core component of the infrastructure Canada needs. If you're not going to do Energy East, you're going to have to do Trans Mountain. So I think the government was bold in its step to acquire Trans Mountain from Kinder Morgan. It was a disappointing outcome, but it's a setback. I think there's focus there. There's a will to get this thing through. It's important to get a global price for our oil and to find new markets for it. I think it's important for Canadian investment to signal to foreign investors that we can get big infrastructure projects done in this country.
Do we have to move more quickly then? I mean, the Prime Minister takes questions about that, and they say we're going to study the process, and some people are wondering if it's time for just Ottawa to get very tough on this file and build it. I think he was asked recently, will the construction even begin before the next federal election? And there was a bit of a dance around that issue. I think people are getting impatient. Foreign investors getting impatient.
Certainly foreign investors are getting impatient. I think Canadians are getting impatient, but there's due process, and our courts are telling the government and Canadians that this is the due process that we want to see, and the government's going to have to move through that process. And it's frustrating because capital's being invested elsewhere in the energy industry when it knows it can get to market. So it's important that we get this done, but as you said, timing is important, and that was a very disappointing outcome, but it's not the end. And there's a will to keep pushing forward. But it has impacts on other policy agendas, as we've seen in the past week.
The other obviously big risk of the Canadian economy, and we've been talking about it a lot, NAFTA. The talks continue. For a while we weren't in the room. Canada is back in the room now. How important is it for us to square something away on that file in short order?
I think it's important to remove the uncertainty. Having said that, if the fallback is to WTO rules, I think most economists, including our own group, have come out with, not as big an impact to the economy as one might think. About roughly 1% growth over a 5 to 10 year period if we had the fallback to WTO rules. Now there's noise about whether the U.S. administration would pull the WTO rules, and there's uncertainty around that. So I think there's a lot of uncertainty with the public negotiation and posturing on both administrations. I think there was some positive progress over the past month, particularly on the rules of origin and the content and autos, and kind of backing down from some of the rhetoric around auto tariffs. I think was very positive momentum forward, but we have some tough issues to resolve. And we've talked about Chapter 19. And Chapter 19 is very important to a country like Canada, dealing with a larger, rules-based, more litigious trading partner, to have an unbiased third party review those rules and those actions, I think is critical. And I think the government's right to draw a red line around Chapter 19.
We draw the red line there, what do we give up then? It's a negotiation, right? We need to give something up.
Exactly, there's a negotiation. So there's a number of other clauses that I think would be more important to the U.S. administration's agenda, and that is patent protection and extending the life of patents, particularly in the pharma and biomedical science industries. That has, certainly it's a global agenda for the U.S. administration to extend and protect U.S. patents. I think that's going to be a big issue on the table for Canada, and a pro-growth agenda, certainly for that industry. You've got cultural issues and around media. Ownership of media has to be tested. You've got the de minimis rules around how far do you go from the current $20 limit and threshold. The U.S. have asked for $200. There's probably a negotiation and a consensus somewhere in the middle of that, or somewhere below 200. So I think those are all issues that are on the table simultaneously, and there will be a give and take. And I think the Canadian government's going in with the right kind of red lines around culture, media, and dispute mechanisms are really important to Canada. But you're going to have to move potentially on de minimis and dairy and IP protection to get those. So it'll be, I'm sure, a very interesting couple of weeks in Washington and Ottawa, trying to figure out the balance between those.
Now, in a couple of weeks, about 5 weeks, I guess, recreational marijuana will be legal in Canada. Bay Street has been slow to put money into the space. Some firms now dipping their toe in the water, some of your competitors. Yep. RBC has been one of the more conservative banks in this space. It will be legal come October 17th. Yep. Does RBC have plans to start backing some of these deals, putting capital to work in marijuana?
We're taking a slow, cautious approach because it's an evolving industry. So the first thing you look at in an industry, and you look at the credit risk of the people you're doing with, the business plans they have, how sustainable is their business, and it's all new. We still don't understand the size of the market that these companies are selling into. What is the total addressable market for recreational cannabis in Canada? That's an open question. We can benchmark off Oregon or Colorado or some other markets, but we don't have a strong understanding. There's a lot of supply being created in the marketplace right now. So there's a lot of activity, uncertainty around economic outcomes. There's a lot of regulatory uncertainty. As a North American bank, as a global bank, we have different regulations, and we have to be very careful about how we transact and how we do business. Even on the advisory side, between U.S. national and federal regulation to Canadian regulation, we have to be very careful. So we're trying to understand the regulatory environment. We're trying to make sure that our customers and our potential customers can comply with Canadian regulations. From the manufacturing to the distribution side, we're trying to make sure business plans are solid before we make representations on the advisory or the banking side and understand the credit risk. So there's a lot at play. There's a lot of variables at play, which should lead to caution. And therefore, we're being cautious as we try to understand this along with all the players in the industry.
Yeah, to me, it seems that the American one is a big one, particularly for an outfit like yours and others that have considerable operations in the States. At the federal level, marijuana is still illegal, and I guess we simply don't know what that could mean for your business or other people's businesses in the States if you get heavily involved up here.
Exactly. So we have to be very careful what counterparties we deal with, particularly U.S. counterparties showing an interest in Canada, whether it's a CPG company based out of the U.S. having an interest in cannabis, or where you can't deal with a U.S.-based cannabis company, we could not support or be involved in any type of transaction. So understanding those rules and making sure we don't run afoul of them is really important, given the size of our global franchise. We can't make a mistake, so we're being cautious.